Yes, sir.
Yo.
What's up, man? We back at it again. Welcome to the Wealth Talk Podcast. It's your boy D Ward back at it again. Got the wolf with
You
me.
already, you already. We here, family. How you feeling, brother?
Hey, bro, it's another day, another dollar, man. But hey, we gonna get straight into it, bro. Today we're gonna be talking about why investing is not just for the rich. This is for everybody, man.
Yes, indeed. Yes, indeed. Some topics that a lot of people been waiting to hear about. You know what I'm saying? We're trying to make sure that we going over the basics so you know exactly what you need to do if you want to get into this world.
That's a fact, man. And all these topics you're gonna be talking about are things like what a stock is, how does time and compound interest be your favorite tool during investing, what is risk tolerance, and also what is diversification. And we're gonna break that all down so that way y'all can understand it. We're gonna be your finance chat GPT for the day. We're gonna break it down simple terms, man.
You know what I'm saying? That's what the people need, brother.
That's a
So now let's get
fact.
into a quick disclaimer. You know what I'm saying? So this podcast is for educational purposes only. We are not financial advisors, family. So please do not sue us. Do your own research. Make sure that you know exactly what you're doing before you put any money into anything. All right, family.
Yes, sir, ski. And to top it off, too, before we get in, we gotta do our money mindset moment. So, for those who are new viewers, for every episode of Wealth Talk, we do a money mindset moment to bring positive affirmation regarding wealth into the conversation. You feel me? So, today, we got the earlier you start, the easier it gets. Don't wait to be rich to invest. Invest so you can be rich.
Mm.
Mm. I
That was a jam.
Yeah, I was stuttering too. The impact wasn't there. I said the earlier you start, the easier it gets. Don't wait to be rich to invest. Invest so you can be rich.
That's a jam.
Hey
That's a
man,
jam. That's perfect for this episode, bro.
that's a fact, bro. So first thing first, before we invest into anything, we gotta learn what a stock is. So, shoot, you want to break that down, bro, to someone, a 5 year old? What is a stock and like how does that work?
For sure, for sure. So a stock, when you think about the word stock, you think about the word ownership. All right. And when it comes to ownership and when it comes to owning a stock, you want to think about you're owning a piece of a company. And the easiest way to break that down is a slice of a pie, a slice of a pizza. You know what I'm saying? You don't own the whole thing. You own one stock, so you own a piece of it. And that's probably the easiest way to think about it when it comes to a stock and ownership. You own a piece of a company. Now, there's real world examples out there like Nike, Apple. These are, brands that we use every single day. I know you got a pair of Nikes, bro. I know you got a Apple iPhone. So everything
Fact.
we do is it's all around us, and we most likely own some of these companies as well. Well, some of the brands that we have, we don't own the stocks, and that's what we're going to talk about today. Now, there is some differences between trading and long-term investing. When it comes to owning a stock, that means that you're more likely looking into having long-term ownership. So when I say that, it means you have like a 20-year horizon outlook. So for example, if I buy Apple and I'm buying a stock, which is also a share, it means a piece of a company is a share. I'm looking to own this for at least 20 years. That's a long-term investment. Now, trading is a little bit different. Now, I can have the same exact approach. I can buy a stock or a share, and then I could, have the approach of selling it eventually at a shorter term. So I can own it for 1 year, and then once I've made a profit from it, I've made more money than I put into it. I decide to sell it a little early. That's a trade. So that's trading versus long-term investing.
Mm. That's a great way to put it, bro. And honestly, for a lot of people coming into it, it may seem very complicated because you're probably looking into the trading side at first. You'll see those
Yeah.
TikTok guys, on the charts and doing a bunch of stuff and talking. But really, y'all, long term investing, like Mike said, buying a share and holding for 20 plus years, that's the simplest way to do it if you're just getting started because you just put it on autopilot. You can just buy into one thing every day. And that's another method of investing that we call dollar cost averaging. But we'll get we get into that future down the road. But starting off, long term investing, in my opinion, is probably the best way to go about it. And then eventually, if you want to get into trading, like Mike and I, that could be an avenue you can search once you kind of master what long term looks like.
Yeah, bro, exactly. And the cool thing about long term investing is that you don't have to guess on when to buy and when to sell because you have a long-term outlook. So, for example, a lot of people, like your 401ks and your investment accounts, these are all long-term investment tools. And what they do is they'll buy into the market and they'll hold it for however many years you're working for until you get ready to retire. The cool thing about that is that they don't have to time it. They just hold it and eventually they've made money over time because historically, the market does give you a positive return over a certain amount of years. So that's the best part about long-term investing is that you don't have to be super smart to make money. You just have to hold for a while.
It's a fact. On top of that, too, there are certain stocks out there that actually pay you just to own them. So
For sure.
of course, when we talking about stocks, they appreciate in value over time if they're strong companies. So a good example of that is like Netflix. Netflix was what, like $10 or something like that, like 10 plus years ago. Now they're $1,000 per share. So that's called appreciation in the stock, and that's where you really build your wealth. It's through the accumulation of a lot of shares that appreciate rapidly. Well, not rapidly, but improve in value. You see what I'm saying? Just like buying a house, kind of, and you will get more equity in the house and all that. But
For
now with
sure. That's a great way
dividends,
to look at it.
yeah, and then with dividends, it's like you could capitalize off of the appreciation of that stock. But on top of that, the company that you bought from can actually pay you a little bit from their sales on a monthly, yearly, annual basis, just because you own them. You see what I'm saying? Does that make sense?
hmm No, it does. It does. And there's some examples out there. There's one company that we own and we tell some of our members to buy as well, and that's Realty Income. The ticker
Mm-hmm.
is O, and what they do is they pay you a dividend every single month, compared to some companies out there that'll pay you a dividend every 3 months. So,
Facts.
it's really cool to own something that'll pay you, every month on top of you having a job and maybe another side hustle. So this is why, it's really interesting to see how some of these investment vehicles work for you.
The fact. See one of them ones too. That boy Warren Buffett got like he get paid billions of dollars every month just from owning realty income. It's crazy.
It's wild. Absolutely wild, bro. Yeah, man.
Facts. So I guess how would now with stocks and dividends being explained, what's this thing with compound interest that everybody really talks about? 'Cause everybody says use compound interest, start when you're young, but what if somebody really doesn't know what that is and it's just starting off? What does that look like?
Let's say you get ready to try out for the varsity football team, you know what I'm saying? And you a
Ah,
freshman,
shit.
right? So you want to make sure that you're
Facts,
looking
facts.
like all the seniors out there. And the only way to do that is if you stay consistent. And by staying consistent, you need to be working out, lifting, running, and eventually your body will start to look like how the seniors looking. It's almost the same as that concept when it comes to owning stocks. The longer you own, the longer that you keep buying shares and own it over time, the better you would continuously get paid on it. And it's just a consistent growth on top of growth on top of growth. So, compounding is, I think, the easiest way to build wealth over time, especially when you're owning shares that pay a dividend, like we was talking about earlier. So, and the best thing about it is time. Time matters um, more, especially when you invest early. So I think that's the biggest part of it is making sure that when you are looking at like if I'm going to make compound interest off of this investment, you need to have time on your side. So you can't expect to, get rich off of compound interest in 1 year. You need to have like that 10 to 20 year outlook that we were talking about before. Does that make sense, bro?
Yo, bro, nah, you sure hit it on the head, and that's kind of going back to what I previously said with dollar cost averaging. Like when you combine time, compound interest, and dollar cost averaging, that's literally like the one, two, three on how to get wealthy. You know what I mean? And it ties back to what Wolf was saying. With compound interest, is literally just compounding growth on top of growth. So you got 20% from your portfolio this year. Next year you get another 20%, then another 20%, then another 20%. That compounds over time to a point where your $500, let's say per month, could turn into $1 million by the time you're 30 years old, and the 20 years, 15 years. You see what I'm saying?
For sure.
So that's why it's important to understand that, because people tend to do it, they just do lump sums. Like, I'm gonna put
Hmm.
$1,000 into the Trump coin, whatever. I'm gonna see what happens. Something wild that we do not recommend. Do not do that stuff. But
No.
when when people do that, they think, okay, I put my $1,000 to see what happens, and they never buy any more. But let's say
Right.
hypothetically the Trump coin dumps like it did, like something crazy, and you lost your $1,000. Now you're like, oh damn, I lost my bet. You pretty much just gambled. But with dollar
Hmm.
cost averaging, how it's working is now you buy, let's say the Trump coin at a certain price today. Hey, let's say tomorrow it dumps a little more, but you didn't put all of your capital in. You only put in a little piece per day. So now instead of stressing like, oh, I lost all my money, you're thinking, oh, bet I could get it at a cheaper price now.
Exactly.
So
Exactly.
now with that, yeah. So with compound interest tied on top of that, and then the time that you have from starting off young, and you're just getting in at a cheaper price every time as it accumulates in value over time, it's a win-win scenario.
It is. It is, and that goes perfectly into the next point that also goes with that is risk tolerance.
Mm-hmm.
So a lot of financial advisors. I'm not a financial advisor, by the way. Got to say that, but a lot of them would tell y'all that when you're first investing, like when you're a beginner, when you're young, you have a higher risk tolerance because you're not as dependent on that money. You're going to be working more than someone that's looking to retire. They have a lower risk tolerance. You know what I'm saying? So, there's
Right.
different examples of high risk versus low risk investments. Like bro said, a high risk investment is buying the Trump coin. You know what I'm saying? There's no proven model to it. No one has consistently made money off of it for the last, 20, 50 years. So it's a high risk, it's a high risk play. But at the same exact time, there's low risk investments like Apple that's been consistently making people money over the last, 20 plus years. And that's something that you will probably want to put in your retirement account because you know that once you're getting ready to retire, if you got 5 years left, you know that that's actually not going to let you down when it comes to you getting ready to take out and start to live off of that money.
That's a fact. Even though Apple's in the heater seat right now, a lot of people got a lot to say about Apple. But hey, man, like Buddy said, like Bro said, they've been around for a while. They've been a still $3 trillion company. So that's the prime example of low risk.
For sure.
But that ties in perfectly to our next thing, which is what is diversification specifically? I guess what does that look like when it comes to the average Joe trying to get into the market?
Mm, yeah. So, you know, diversification is probably the most important thing when it comes to building a portfolio. Um, Now, we got a funny analogy for y'all. It's a dating analogy, right? So let's say you out
Facts.
there in the dating world, and you're a single fellow, a single gal, and you're looking to find the right person for yourself. Are you going to put all your time and energy into one person, or you're going to see how multiple people are with you? You know what I'm saying? So, funny example, if y'all watch Love Island, my girl got me on the Love Island thing right now, but I ain't gonna lie, that show funny bad. Uh, but
Buddy,
what they're doing on that show is like they're not putting all their time and energy to one person. They're looking to see how each person is with them, and then that's probably the easiest way to explain diversification. Don't put all your eggs in one basket. You know what I'm saying? So if you're out there and you're looking to build your portfolio, usually what we say is have a little bit of high risk, have a little bit of medium risk plays, some low risk plays, and then cash on the side to buy more if, you know what I'm saying, it feels like the sky is falling. Now, you may be asking why would you spread your investments across different industries and assets? It's because if you only have everything in one company, let's say we just use the Donald Trump coin, we don't use that again. You put all your money in there, $1,000 and all of it dumps. Now what? You got to find another $1,000 to put back into the market when you could have just put $100 into the Trump coin, had $900 left over to use it in other different places. You know what I'm saying? Now, if it does dump, you still got $900 left. You just still make a move with that. So that's why it's so important to diversify.
It's a fact. And that's a big piece that a lot of people tend, I feel, to forget about when it comes to investing. And it's because I feel like they don't really know the tools for diversification and how many tools there are to do it. Like a prime example
Yeah,
would be like ETFs and index
yeah,
funds.
yeah,
Um, so like for those who don't know, an index fund is something like the S&P 500, which holds the top 500 companies in the U.S. You can invest directly into that. It's a different market though, and it's a lot more expensive with index funds specifically. But there are things called ETFs, which are exchange traded funds that track these index funds. So a good example would be VOO or SPY. They track the S&P 500 index fund. And you literally have the ability to get a piece of 500 companies, 500 of the best performing companies in the country just by getting into one of those ETFs at a much lower price than what it would be to get straight into the S&P 500. So I feel like if the people's just looking for a low barrier, a starting point to learn how to start diversification, and really just to start out any portfolio, I don't think there's much you can beat without the VOO and the SPY. Those are the best places you can start. And that's personally where I started as well. I was just dollar cost averaging into VOO. And Mike was wild. Mike was going crazy. He's making crazy profits on other stuff. I said, but everyone's journey is different. You got to start somewhere. So that's a great place to go for it.
no, absolutely. And you made a great point because I think one of the cool things about the SPY is that it's actively managed. What that means is
Mm-hmm.
that there's people that invest for you for the SPY. So, like he said, there's the top 500 companies all in one basket, right? So you pay for that one basket. And let's say there's a company inside of that basket that's not performing the correct way, they'll kick it out of the basket and replace it with a better company. So you don't have to do anything. You just have to own it. And that's one of the best things about owning the SPY. And that's actually something that, the top investors out there compare their returns to. So let's say I had a return of 8%. I compare it to the SPY because that's been the best performing um, ETF, over the last 50 plus years. So everyone's comparing their performances to the SPY because of how good it is.
Really, everybody. That's the it's like a beacon. You know what I'm saying? Any hedge fund or like a fund manager is looking like, okay, how can I get close to, if not beat, the annual rate of return for the SPY, which is about 7 to
For
ten
sure.
percent.
For sure. For sure, bro.
I,
Yeah. Yeah, man. I mean, like you said, man, it's everyone's journey is different. So don't feel like you have to just straight jump into the water when you barely
mhm.
learn how to swim. You know what I'm saying? So I started off a little bit rough, but that's because, I had a high risk tolerance. You get what I'm saying? So if you don't have the risk tolerance that you want to have yet, then start off, with a SPY investment. Start off with just using a virtual account. Don't even use your real money yet. Just see how it works before you even get into it. Because once you get into it and you start making a little bit of money, that's when you feel like, all right, I'm stuck because now I feel the thrill. I feel like this is something I want to keep doing. And you kind of can't turn back after that. And it sucks to lose money. So I would always say use virtual accounts or use smaller amounts before you get too deep into it.
That's a fact. And honestly, that's a perfect segue into our next piece for, our beginner tips. For those who just starting off, when they walk away from this, what can they take? I think bro hit one right on the head. Virtual accounts and using paper money. For those who is kind of newer to trading or the stocks or investing in general, there's literally, if you make a Charles Schwab account, which is a brokerage, and you download an application called Thinkorswim, they have a feature on there called paper money. So once you do your login, you create your password, email, all that, it will bring you to a crazy looking dashboard. I'm not gonna lie, you're gonna be like, what is this? But trust me, take your time with it, and maybe we'll make a video on that in the future, how to navigate it. That would be pretty fire, actually. Yeah, we can do that in the future. But on that paper money account, it'll give you, I think, what, $500,000 in paper money and 200,000 in paper money. You could just invest and learn how it works with it, learn how the stocks work, and just literally figure it out while you're doing it. So That's a fire tip right there. I think the second one, hey, call me crazy, bro. Call me crazy. Have a little bit of crypto. Have a little bit of something, man. And people might wild out. People go say, "Oh, you're crazy, crypto." Ooh, ooh. But my thing is, we've seen it historically. Bitcoin has hit $115,000 per coin, and if we see the run, and it was 120. See, and if we see the run that it's been on ever since it was introduced to the world in the early 2010s, and the rest of the altcoins that were created, like Bitcoin itself has given back 84% annual rate of return every year. So have a little bit. Like, I'm not saying put your whole 401k into it, but at least have some diversification like we talked about.
I mean, like you said, you was say 10 years ago, 2015, put $10 in there. I mean, you have a good amount of money right now, and it's nothing. What's ten
Living.
dollars? A pizza.
Two $5 biggie bags, man.
Two, that's wild.
Swear to God, bro.
You're talking about thousands of percent of returns. So, like you said, man, don't overdo it. Always do what's comfortable for you. Because at the end of the day, you still need to survive. You still need to take care of people, take care of yourself if you have to. So, do what's always comfortable for you before you get into anything. That's probably another important piece too.
One more tip too, unless you got one too, bro.
What you got?
I was gonna say, study the what's it called? The heat charts. Is that what it's called?
Oh yeah, the heat map.
Yep, the heat maps. Um, for y'all don't know, the heat maps is pretty much maps that tell you how much of a stock takes up in an ETF. So like there's percentages. So for example, in the SPY, Apple may take up like 10% of the SPY or something crazy. While Nvidia might take up like 15% of the SPY. But the reason you want to study that is because it will let you know what companies are the most favorable in the market. So when you do go on to investing into individual stocks down the line, now you know what to look for when looking for solid companies.
They just show you like said giant box, and each box has its own individual slot for each company. And like he said, some boxes are bigger than others is because their market cap, which is how much the company is worth, is a lot bigger than the other companies. And that's really important too because let's say, for example, the SPY, every single retirement account 401k investor out there is buying into the SPY, whether they think they are or not. So if you're buying into the SPY, that means that they're also buying those companies that's on the heat map. You know what I'm saying? So if that company is bigger than the other one, what does that mean? Every month, somebody is either buying into that company. So it's definitely important to, see how that works and also see what companies are being added into there. Because some of those companies may be a little new to the game. And if they get added into the SPY or, to the QQQs, which is just like the SPY, but it's just for like tech companies, then that's also something you want to look at because now they may be getting a little bit more interest since they're being added into it.
QQQ been on the run. Forgot. So QQQ.
Has been. Shout out to QQQ. Yeah, man.
So, so what would you say,
Now,
bro, is also some like investing myths out there that people could fall for?
oof, investing myths. There's so many of them. Where should I even start? Man, the worst one is getting rich overnight. It is not a thing, family. You know what I'm
Lord have
saying?
mercy.
Especially with these meme coins right now. Like, if you're in the market, right, and your first big win is on a meme coin, please, please, please take a step back and reflect and know that every single play is not going to be like that play. Because if you do, you will lose your shirt quick. You know what I'm saying? That's one myth. Because we see it all the time.
All the time, man. All the time. What was that one that happened? Nice guy, the nice guy coin. That was the one that ran.
Nice Guy. Another one we called that one Open Door, but we knew that was a
Open.
hitter. So you know what I'm saying, that ran up 100% in one day, and that was just the
Mm,
shares, not counting the options.
that was a
So
great play, mate. Yeah, y'all get in the
yeah,
Discord, man, because that was a
yeah.
great play to get into.
Discord free, man. Discord free, man.
That's a fact. Not
Nah, for sure.
I agree that I agree with that though, bro. Definitely, if you take your money where you can when it comes to them type of things, but have your diversification where you have some money set aside for them high risk stuff. Don't put everything
For
into
sure.
it.
For sure. And another myth too is like some people think that trading and investing is too hard to learn. You know, um, it's plenty of people that I've taught how to trade and invest, and they didn't even go to college. They didn't even have high grades in high school, and they had the same exact mindset. Like, I don't know, bro. That's too much, bro. That's too much. But then once they get into it, and I start comparing it to, what I'm saying, trapping or just selling snacks when you was in high school, like once people start to think about it in that type of way and they get to have the experience with it as well, because looking at it from the outside, yeah, it may look like another language, but once you get into it a little bit and you start to get a feel for it and you realize that this operates just like the outside world, you know so that's probably the easiest way to look at it. It's not hard as long as you put a little bit of time and effort to it. It's very doable, and there's a lot of people out there that never thought that they would even be in the market that's making tons of money now. So it's not hard to get into the market, family. Trust me.
Oh man. I speak from experience from it, man. I used to be just like that. I ain't know what was I. Y'all bet, yo, Mike. I don't know what I'm looking at, but
You definitely was.
I swear. But no, learning from bro is still learning from bro. But also take your due diligence. You know what I'm saying? Like we got
Yeah,
ChatGPT, man. We got YouTube out here. You have our content that we make daily. We post probably gonna be posting twice a day now. It's like sooner rather than later. So
yeah,
use your resources. You feel what I'm saying?
for sure, bro, for sure. Yeah, man. I mean, other than that, there's tons of myths out there, but those definitely the ones I want y'all to know for now, man. I ain't gonna do it to y'all, man.
That's a fact. Ah, hey man. But no, for the final takeaways, y'all. I don't know if you had anything else, Mike. I just want to say, man, investing is ownership. You know what I'm saying? We want to be
Yeah,
owners. Us black people are the number one consumers in the world. We need to start owning because if we did that, ain't nobody could stop us, man. So we got to change our mindset.
for sure, bro. And I'll leave them with some. If y'all want to get started, like you said, Charles Schwab, to download that. Get a Thinkorswim. Did you a virtual account to download a Robinhood, Webull. Those are just the easiest brokerage accounts to get started with, so you can just understand what's going on. I'm not saying put money into it. I'm saying just download it, look at it, see how the market moves every day. Watch CNBC. That's the news for the stock market. Listen to the verbiage. You know what I'm saying? Some of the macroeconomics that happens that affects the market. Because if you're working, believe it or not, you're in the market. If you got you a little retirement account, you're in the market. So why not understand how your retirement is operating? Because eventually you need to retire and you want to live off that. So you could put the control in your hands if you want to, family. So definitely just try to get an understanding of everything first. We got our free Discord every day. We're in there, probably dropping some plays, some gems. I can ask us questions. We'll get right back to y'all. And we just here for y'all, family. I say it all the time. We employees of the people, man.
Well, these are the people, man. That's a fact, man. And I'm gonna second that. You want free plays, you want guidance, you need help learning, you just getting started. Discord's free. It's free as hell. Shouldn't be free. But goddamn it, it's free as hell. You know what I'm saying? Y'all get in there, man.
This is lit though, family. Y'all let us know what y'all think in the comments. Hit that like button. Share with all your friends and family. Let us know what's up. Let us know what we can do better. Let us know what else y'all want to learn or listen to. Yeah, man. We appreciate y'all tapping in with us.
That's Sirski, man. Y'all know the vibe. It's your boy D Wall, Brother Wolf. We out of here, man.
Peace.
Yes, sir.